The Australian housing market is completely and utterly fucking cooked. But why is it that Australian banks are so happy to lend massive amounts of money for mortgages, but won't lend two tenths of fuck all to great business ideas? Whereas if we compare that to the US, the American housing market is really very different, as well as their banking system. Let me explain a couple of key differences and why you're getting fucked in Australia and America is leading the way for their next generation. The major difference in America versus Australia when it comes to building contracts or contract to build a home is that in the US, American banks are generally happy to lend on what we call a cost plus contract. Whereas in Australia, your banks will not lend on cost plus contracts. They will lend on fixed price contracts. So let's explain the difference between the two. Aussie banks love fixed price contracts because it guarantees a fixed amount of money that the bank is lending, which also guarantees future profits for them. Whereas in the US, banks are prepared to take more risk with a cost plus contract, as the homeowners are also prepared to take more risk. With a cost plus contract, your builder will work with varying trades and suppliers and contractors to come up with the best price and the best option for the homeowner, who is working in conjunction with the builder to secure the most affordable and also the most secure option that they feel safe with. This can lead to huge savings in the building process for the end consumer, which is you. But it also means that there's an element of risk there. So you take some risk in the US, whereas in Australia, there is less risk. This, of course, means that Aussie consumers are protected from potential blowouts, while Americans are expected to shoulder a little more of the burden, but they also get the opportunity to save a ton of money if it's possible. Home loans are massively different in America. In America, your primary residence, you can claim the interest on that home loan as a tax deduction up to the value of $750,000. So if you borrowed $750K and you're paying interest on that loan in America, you can claim that interest as a legitimate tax deduction against your income. Whereas in Australia, the only people that can get a tax deduction on the interest on their loans are people who buy investment properties. In America, they promote residential home owners, you, me, mums and dads, kids, everyone, to get into the housing market by offering them a tax deduction on their interest. And the Australian government will only let you claim a tax deduction on the interest on an investment property, not your primary residence. So the US has a better system for mums, dads, you, me, and everybody else. The Aussie market is completely skewed towards investors. Then let's talk about the actual interest rates themselves. When you take a home loan out in the US, you have a fixed rate of interest for the life of the loan. So hypothetically, you're borrowing $750,000. You borrowed that at 6.5%, for example. It will be 6.5% for the 30-year life of that loan. Whereas in Australia, you will only get a fixed rate for generally 1 to 5 years, and then you go on to a variable rate, which means that you're riding the market no matter what, unless you refinance the loan or you pay it out completely. In America, you get certainty over the life of the loan with a fixed rate of interest, whereas in Australia, you've got to gamble on what the future rate of interest will be, which benefits the banks because the banks always make money. Always make money. The banks always make money in Australia. What is it about banks? Why are banks allowed to be a protected species and always make money? There's no other industry that can guarantee to make money like a bank can. Who benefits the most from a fixed rate over a longer period of time? You, the consumer, because you can ride out inflation or you can ride out any economic bubbles with a certainty on your interest rate. You don't have that in Australia. So in Australia, we have a fixed price contract with a variable interest rate. In America, you have a cost plus contract with some variability in what the end price of the product will be, but you have certainty in the interest rate over the life of the loan. Where is it easier to build a house, in the US or in Australia? Australia has a ridiculously complicated building code and a ridiculously complicated building approval process. It's very centralized here under the National Construction Code, and then state by state, they also layer in their own rules and regulations around that National Construction Code. In the US, local jurisdictions can override any state or federal compliances. And why it matters is because stricter national regulation makes it harder for Australians to build more affordable homes. Whereas in the US, county by county, state by state jurisdictions mean that you can go to a place where it's more affordable for you to build a home with less restrictive building codes. That's your choice. You get the option. So let's break all of that down into some simple questions. What works better for the consumer, for you? What works better for you? Well, in this example, the US would be the clear winner because you get a 30-year loan with a fixed term of interest, whereas in Australia, you're rolling the dice every time the Reserve Bank meets, which can happen multiple times a year, and you're going to get screwed no matter what. Investing in property, well, if you could claim the interest on your home loan as your primary residence in Australia, what difference would that make to your life? I mean, hypothetically, if you're spending half of your income on a home loan and half of that payment that you make each week is interest, then hypothetically, you'd be claiming that interest as a tax deduction against your income. This would put more money into your pocket at the end of the year, but it would also erode the bank's profitability, which in my mind is a fucking fantastic thing. Let's promote more people to get into the housing market. Let's promote more people to buy houses. Let's help more Australians afford to buy houses. Oh, but shit, that would undermine the bank's profitability. Well, wouldn't that be a fucking shame? So the bottom line is this. If you're a switched on consumer and you want to manage your own risk and you want some freedom and flexibility in how you decide your housing choices, then the US market is 100% better. There is no doubt about that. But if you want a system that holds your hand and nanny states you to protect you from yourself, but limits your options incredibly, then Australia wins. And it wins because you're paying a premium price for it. In Australia, the big four banks are a protected species. CBA, Westpac, NAB, ANZ, they are a protected species. In fact, they are an extension of your government. They are too big to fail. Nothing will ever take down their profit margins. And they are there along with your federal government, your state government, and your local council, three layers of government, along with them to take as much money as they can from you. The US system works, houses in America are more affordable, and if we had the US system in Australia, your banks wouldn't be posting record profits every year because a little bit of that money would be back in your pocket, incentivizing you to potentially buy another house or invest in a business, or to start up a new company, or to put on some more employees, to borrow some money from the bank to create something real. If you've made it this far, congratulations. You now understand the difference between a cost plus and a fixed price housing contract, and you understand the difference between a US bank with a fixed rate of interest over the life of the loan and the Australian gambling variable rate system where the RBA decides how badly they're going to fuck you every time they meet. Australia and America are very different. What works best? What's your opinion? I know this though, I'm probably never going to get another fucking loan from a bank again after making that video.